This is a Forex blog for October 27th, 2011. And days like this, anybody can make money trading. You don't need our software. Uh, as long as you trade with the trends, you're going to do fine. Our software allows you to guesstimate whether the trend's likely to continue or not. And like most days, we really want to buy the strong ones versus the weak and sell the weak ones versus the strong. Starting the day out, you can see the Australian had incredible strength. The intermediate time frame was up. The daily, weekly, and monthly is up. It is the #1 strongest currency. And the dollar is the weakest one, followed by the yen, and pretty much the yen and the pound are equal in terms of weakness. The New Zealand also had an intermediate time frame trend up. The daily was up, and after 4 o'clock the weekly shifted up. When it comes to longer time frame trends, I focus more on the weekly than the monthly. The monthly I don't really use in deciding whether to trade a currency. I will use the monthly to decide whether or how many lots to trade. In other words, if the weekly and the monthly are both up and the real time is showing incredible intensity like the New Zealand here at 3:30, then I will trade more lots with it, because not only is it more likely to work, it's also more likely to give me 20 to 50 pip win versus a 5 to 15 pip win. So again, we want to buy the strongest ones, which today is the Australian, later the New Zealand, the Swiss. After 7 became really strong. The weekly trend is up all day. And here's how you really want to use the currency meter. You want to see what the last move each currency did. In this case, before midnight, the dollar had incredible weakness. Does it match the weekly and monthly trend? Yes. So that trend's likely to continue down. You want to measure both the intensity. Anything at or above the 80 level shows extreme weakness. Then you want to see during the counter trend trade, did it have less strength than weakness? If so, and if it matches a longer time frame trend, you can anticipate some weakness coming back. Now, if you look for some sells in the dollar right here, it only lasted 10 minutes, you probably had a loss. After a little bit of strength right here and some weakness, you look for a short again. Guess what? It stayed relatively extremely weak for about 2 hours, and then another hour, half an hour of strength, which was less than the weakness, then another hour of weakness. Pullback trade right here, which had less intensity than the peak of the previous one. And guess what? In here at 7, it's a no-brainer. You have 3 hours of extreme weakness, followed by about an hour or less than an hour of just mild strength. The longer time frame trends down, and guess what? The weakness resumed. And that's really the perfect pattern right here. Extreme weakness for 2 or 3 hours, followed by half an hour to an hour and a half of mild strength. If it's in the direction of the longer term trend, it's likely to resume. Now, coming up to 8 right here, notice one of the ones that was the strongest, the Swiss, very strong. So let's just leapfrog into 8. This is the perfect pattern if you have the patience to wait for this. So the Swiss was already strong. The dollar had incredible weakness, very little strength. It was likely to resume its weakness at 8 o'clock. And here's the chart. Here's 8 o'clock. The currency is just slightly below our lower containment band. Most of the time, currencies underneath here will reverse. You have a little bit of a pullback trade right here, and guess what? It fell from about 87.10 down. You probably would have got out somewhere around here at 86.50. That's a 60 pip move. Let's take a look at this on our range charts, which are even easier to understand than time-based charts. These are 6 pips per bar. Now, going back to 8 o'clock right here, you can see at 7:32. Notice on every move down, the intensity of the weakness followed by the counter trend move with almost no strength. Because we compare the dollar to every other currency using 5 different statistical tools, and we also compare the Swiss against every other currency. Some of our tools measure direction, some of them measure the intensity of direction, and so anytime you have a plus 80 or minus 80 reading like this, it's showing that almost all the dollar pairs are going down, all the Swiss pairs are going up, and they're both doing it with intensity, which means for traders who are looking to trade and make money, it doesn't matter what happened before, it's what's likely to happen in the future. And when you have all the currencies moving one way, it's like a freight train. You can't stop it usually, or it's going to go down and go sideways for 6 or 8 hours as traders are afraid to buy, and then it will, once people realize it's not going down anymore, then they will dip their feet in the water and buy. But nonetheless, here coming up to 8, you have our intelligent trailing stops. You can use these to scalp, short at 18, out at 05 for 13 pips. Short again right here, out at 75 for a 25 pip win. And when it's way underneath the lower white band, you usually want to be relatively cautious. You also might want to draw your fibs on the previous swing and just hold on for that fib target to get hit. Notice the 1.618 fib target near a monthly pivot level. It's not likely to go below there. I would be getting out of my trade right here and not getting back in. And again, it did continue down even more, but that's usually a pretty high probability place to get out of your trade. So that's one no-brainer trade today. The Australian was extremely strong and the dollar was weak. Look at this. A lot of intense weakness, 5 minutes of just mild strength. So you want to buy the Australian dollar. It's a no-brainer. And as you can see today, just up, 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 up. If you used our range charts for the Australian, you can find higher probability trades. Let me just get this out of the way right here. Here's our 6 pips per bar Australian chart. And this is a build your own trend tool, which allows you to use our statistical tools on range charts. They only work live. However, they allow you to mix and match different statistical tools using different time frames and literally millions of combinations. But in our sample video, I show the ones that I use, and you can see the effectiveness here. Extreme strength followed by no weakness. That trend continues. And let's say you miss some of this move up. You miss this move up. It kind of double tops right here. Notice the extreme strength, and on the pullback, less strength, less weakness. I tend to just kind of visualize a trend line going off the bar's high, getting in, and notice how well our intelligent trailing stop is. Let's say you're along here at 34, out here at 94. That's a huge profit. And the farther up it is, the more a decent pullback needs to be. But you can basically use on these strongest trending currencies, trailing stops for your entry, exit, entry, exit, entry. And you notice all of them work because today's a trend day. Entry, exit. Tons of profit to be made. Even this last wave right here is up 40 pips. So you don't have to be a rocket scientist. Use a currency meter to find the strongest currencies. It was very easy to decide today that the Australian was the strongest, the dollar was the weakest. You could have also traded, if you wanted to, the Australian versus the extremely weak pound. This is not a currency chart that I typically have up, but you have the pound Australian, the weak pound, strong Australian. This thing's going to go down. It's going to go down a lot. So let's bring that up and look at this during the early parts of the trend. And guess what? Down, down, down. Hundreds and hundreds of pips. So, you knew it early on in the day. One of the things that we do is we sell sideways lows like this. This one's so weak that really the only pullback we had was kind of like this. You might have gone short right when it broke that trend line with your stop right above the high. And most of the time, the markets will go to and either stall or go sideways at a fib target. Notice to the pip. And the farther down it goes, the less likely it's going to continue down. But you could have still made a fortune just selling the lows down here. Our currency meter showed you that. It showed you the pound was one of the weaker ones, probably the second weakest after the dollar. And the dollar was weaker later in the day. Earlier in the day, the pound was the weakest, or as weak as the dollar at least. So that's how you use our tools. Number one, pick the strongest currency to buy versus the weakest, or sell the weakest versus the strong, like you see here in the pound Australian. And then, there's 2 entry methods: sideways 30-minute to 2-hour rectangle patterns. When it breaks out, you get in. And I prefer pullbacks, 15 to 25 pip pullback. If the market goes up, Australian dollar, for example, pulls back, 12 to 25 pips. Draw a trend line over the bar's highs on the way down. As soon as it starts going back up, you go long. Put your stop 1 or 2 pips underneath the swing low, and then you draw your fibs on there. As the market's going up, if it breaks the high, it installs at a resistance area above it where there's likely to be selling, exit half your trade, and use the trailing stop for the other half. Pretty much a no-brainer.